What's going on today?
Hey, Scott, thank you so much. Hello, everybody. Steve,
Good to
how's it
be
in
back.
California?
Good to be back.
Yeah, it feels like it's been forever. It's only been a couple of
hmm
weeks. Scott was indicating or telling everybody about. We had our test drive. So if there are any new people in the crowd today from the test drive, then welcome to the Office Hours Trade Ideas webinar. And just looking at the date there, Steve, August 23rd, wow, one more week basically, and then September will be upon us.
I'm thinking about the
And
3-day weekend coming up for Labor Day already.
that is true. That is true. That is true. We got another 3-day weekend to kick it off. But then it's off to the races, so to speak. We just wrapped up the earnings season not too long ago, and here we are, poised at all-time highs. So it's going to be interesting moving forward. So I'm getting a little ahead of myself there. Welcome, everybody. I'll be your host today, Jamie Hodge, and of course, I got Steve Gomez in here with me as well. Before we get rolling, just a quick moment for the disclaimer, and just want to make sure everybody in attendance is aware of the fact that all the info that we share with everybody here is for educational purposes only, simply meaning we do not dispense investment advice, buy and sell information. If you do need that type of service, what to buy, when to sell it, all that good stuff, please do yourself a favor, seek out a registered investment advisor or someone like a Series 7 licensed stockbroker. In other words, somebody who is legally licensed to dispense buy and sell information to you. Once again, everything we share with you guys is for educational purposes only. And always like to take a little bit of time here at the top of the hour. And I tell you what, I thought I had my Epic Pen already fired up, but I guess I accidentally closed it out here. Give me just one momento. There we go. So just like to take a little bit of time at the top of the hour here to let everybody know about the community that we built around the award-winning tech that is TI. Of course, we have our trading room hosted by Barry Anderson. Barry opens the doors up to the trading room about 30 minutes before every open. The trading room is a great asset that we make available to just about anybody. You don't even necessarily have to be a subscriber. You can get in there and try it out for free. Of course, it's always free, whether you're a subscriber or not. Um, Things that you don't really find that much in the investment community. Most trading rooms that are worth their salt are not free, but that's what you get here with Trade Ideas. And Barry does a fantastic job at moderating such a large crowd, does a great job at showing how he uses the technology and showcases his trading style as well. And when things slow down after the first hour or 2 hours, he also doesn't mind asking questions and educating people on the software. So if you have not been taking advantage of the trading room, by all means, get in there and do so. Of course, you get myself and Steve on Mondays for office hours on the 5 p.m. Eastern slot. Steve's going to take the steering wheel on Tuesdays at the 5 p.m. slot. Andy Lindloff is going to ride shotgun with him. Of course, on Wednesdays, we change it up just a little bit. We bring in our CEO and founder, Mr. Dan Merkin, along with Brad Williams, always entertaining with those two, typically giving you a peek at new functionality that hopefully will be coming down the developmental pipeline, sometimes sooner, sometimes later. Andy's going to round out the 5 p.m. Eastern slot on Thursday with the trading studio, and I ride shotgun with him. And of course, our daily support session, which is every Monday through Friday, starting at 12 p.m. and going until 1 p.m. Eastern. So this is a great place to come get a live screen with a live trader slash trainer person from Trade Ideas hosting the session. And pretty much anything is fair game, whether it's a simple configuration or brokerage plus type questions. Just a great place to come and get your questions answered in live real time. So don't forget about that. The next slide, I'll show you how to get there. Pretty simple. We host it on YouTube. So the URL at the bottom left there, trade-ideas.com/live, that's a static address. So once you get there, just bookmark it for easy reference, and then you can just easily click on there anytime you want to visit the live support session. The rest of the hours, it's Barry duplicating the trading room through that channel. But for 12 p.m., from 12 p.m. to 1 p.m. Eastern, it is the live support session. And of course, some additional great educational resources, especially, if you just took the test drive and signed up for the first time. This is a great tutorial. It's a 4-part series. 101 and 201, really crucial when you're brand new. Going to teach you some of the ins and outs and basic navigation of Trade Ideas Pro. And this will really help you get over the learning curve a lot quicker than not watching this tutorial. So once again, this is also available on the Trade Ideas YouTube channel. Once you get over to YouTube, find the Trade Ideas channel, just type in TI University. These videos should come right up, so you can watch them at your leisure, start and stop as you see fit. If you can't, if you don't have the time to burn through all 4 at the same time, well, watch first one, bookmark it, come back and watch the second. So that's why we have them up there, so you can watch them at your leisure. And here we are at today's agenda. Wow, strong market today, Steve. Gap up, kept on going. Everything firing on all cylinders from some of the things that I look for. My CC readings, not only were they money today as far as market direction, but we had the same thing on Friday as well. We'll get into a Holly recap. Kind of a light day for the AI today, only 4 signals. Of course, as always, in any market conditions, we're going to have some quality setup in the form of the opening range breaks. Of course, a lot more on the long side today than on the short side. That's just where the path of least resistance was today. We're going to revisit the modified sector channel that I handed out. I can't remember if it was last office hours or the one before, but some interesting readings that we're going to go over there, on that layout today. So, Steve, I tell you what, how about I pass it over to you? Let's look at the broader indexes, the tracking ETFs, and we'll just take it from there.
All right.
And you should have the baton now, sir.
All righty, here we go. Welcome to my desktop, everybody. Welcome back. All ready for you here with the SPY chart. Don't fight the Fed. That's probably the first thing that comes to mind. Do not fight the Fed. They are in control. Whenever we have a bit of a dip, they find a microphone and we start to see these patterns again. It's amazing how they can break down to the 50 and then just fight their way back through the moving averages. But that is the trend, and it will continue until it doesn't continue. Honestly, I even told the guys on this day here, I said, oh, we're going to hit that SPY 50. I know it. Why? Because, I mean, we did it back here. So I was kind of taken a bit of a shock that was our low for the day last week. And as the market does, it gives back a few, takes an inhale, or takes an exhale, I should say, and then a nice big inhale again. And we found ourselves peaking briefly again to all-time highs. In the big macro picture, there's the Jackson Hole event. I think that could be a bit of a market mover this week, but I'm just going to say it, don't fight the Fed. It's very difficult. Now, in the same vein, it's still a stock picker's market. If you've been paying attention, the breadth out there is extremely weak. The market has very bad breadth, meaning it's the Googles, the Amazons, Netflix, the Apples, Teslas that are sending this market to high. I forgot do you remember the weighting of that one that Michael was talking about? The
I was just thinking about
equal
that,
weight. See if you
and
can find that. We'll take a look at it. But
RSP, was it
RSP? Yeah, RSP doesn't quite look the same as the SPY because the SPY is loaded and heavily loaded. Again, like I said, the Amazon, Apples, Googles, Microsofts, Teslas. And if you add those up, it's almost like 18 or 20%, 5 stocks combined to weight 20% of the S&P 500. I don't know if that's right. There's probably a good debatable topic on that, but interesting. Yeah, RSP will give you an equal weight of the S&P, and interestingly enough, it didn't get to high. So what does that tell us? Just what I was talking about. The breadth of the market is horrible. You got to be in the big stuff, the big caps, to look at your 401k and be happy. It's not like the stock pickers market we had in the fall where the small caps were popping left and right and you could ride some really nice waves out there. Moving on to the tech-laden Nasdaq, same thing applies over there. It's heavily weighted towards the big techs. Also got close to the 50, but didn't touch it. Here we go, hang on a second. Yeah, there we go. Got close to that 50, but didn't touch it. Mind of its own, but the Nasdaq you can see is playing the leadership role. Once again, tech seems to be in favor for whatever reason. The IWM still struggling. Now, my theory on this is I think, a lot of people are just selling the small caps so they can buy the big caps. Is probably what the fund managers are doing. If you've been waiting for your Superman to come here in small cap land since last January, you're going nowhere. You're just spinning your wheels, climbing a hill of shale, as my dad used to say. So that is of interest. So, if you're wondering why are my small caps not working, because they're just not working in the bigger picture. I mean, we've got a lot of darlings that we could look at, especially in the EV space that just got, pretty much destroyed over the last year. There's many of them we could type in. Solo is probably a perfect example of what was strong last year. All this movement back here was very strong stuff, good stuff, and then that was the moment it all just kind of music stopped, and it's been very difficult to make money in these small caps. So my advice to traders is out there is try not to chase the green candles. Don't be chasing the herd. Let the herd come to you. Be as contrarian as you can, and just remember that this is not a broad-based rally. It is a very thinly veiled rally, and to use the word thin, I'll end with it saying the air is very thin up here. It's very hard to get things to move. And again, keep an eye on maybe the Jackson Hole comments this week. Will probably move the market, but we are in just a super channel. That's what I'm going to call it for now. I wouldn't be buying anything after these 3 days of movement. The people who stuck their neck out, the turtle who sticks his neck out, can make progress. I'll be honest, I didn't jump into anything on that day. I was kind of waiting for that 50-day moving average to come, but it never really came. Frozen here for the moment. There we go. So what I'm saying is don't be contrarian. Buying down here is being contrarian, but that was a tough buy. There was really no real level there. I guess if we looked left, we could see maybe some support there along those candles, and that's probably what the market was looking at. But don't be establishing positions after 3 green bars in the general market. That's kind of my only caveat for today. All right. Thank you, Jim. Yeah, RSP, equal weighted, probably as it should be, but it is what it is.
Good take, Steve. Thanks a bunch. What's that old John Cougar song? I fight authority.
Oh, God.
Authority always win, but we could just say it's the Fed now.
That's like a B-side. I don't know about that B-side, John Cougar. I only know
No,
the hits.
fight the Fed. Yep. The Fed always win. Okay, let me get a little drink of water here and grab it back. Okay, interesting stuff to show you guys, especially with when we revisit the modified sector channel. Interesting. Kind of gonna show us where the heat is for the day and where you might, where your time might be better spent. Of course, we'll get to that towards the end here. Let's go ahead and talk about the AI, because I was a little surprised today to see such a low amount of signals. Let's see, I don't know what's happening to there we go. Such a low amount of signals, only 4 signals today, which isn't necessarily a bad thing. I'd rather have 4 on there than 40. But let's take a look here. And of course, before I pull this over to the other side, what are the 3 things that we typically like to showcase, as far as a human interacting with the AI, not just, taking every signal as it comes. We can size these trades up, figure out which ones look good to us. We've got statistical probability coming along with those AI signals. And then if we see some conducive chart patterns that we tend to favor, well, that can give us a little bit more confidence in taking the plays. So we had a teeny little bit of conservative and moderate spread that we'll look at here in the ALF trade. Second topic is trade arounds, which typically we associate with positions of the AI that have been stopped out, and might it be worth taking a second entry depending on how the stocks act around those stop levels. Do they act as pivot points or support or resistance? Didn't really have any of those today because we didn't have any stop outs. And then we like to talk about add-ons. After the AI signal is generated, was there a decent time to add to that position? And we did have a good example of that today in Dell. It's kind of odd seeing Dell and Microsoft all popping up on these scans, Steve, because, well, we all know the first time we had exposure to those stocks, which was a very, very long time ago, but everything in cycles, I guess. So here we have the AI trade blotter, looking very slim today, but that's okay. Let's see here. A smidge of conservative and moderate profit. So if you focus right here on these columns, conservative versus moderate, what we typically look for is a spread at the end of the day. Of course, we don't see these spreads in real time. We have to make the assumption that the spread might develop and how we might be able to take advantage of that. So I was referring to ALF, which was a short trade. Let me get that one pulled up here. Okay, and not a bad entry for a short trade. Notice what the stock did, and I'm just pointing this out. Notice what it did in the 5-minute candle before the AI signal right here. It went right up to that stop level. So that's interesting. Kind of lets us know, well, a big wick up there right to that stop level. Then the AI initiates a sell as it's coming back down. That can kind of give us a little warm, fuzzy feeling right there. And of course, this stock did exactly what we always hope a stock does, whether it's a long or short. It just goes our way pretty immediately here. Now we can see here in the conservative column here, and also corresponding with the time spent is this shaded area around the edges here. All right, that's the visual representation of the AI and the time spent in the conservative mode. So why did the AI exit? Good old profit save. Okay, well, okay, blinked out on me there, but it's back. So roughly right in this candle right here is where the AI exited. Had we simply ignored the AI exit and thought to ourselves, well, we think this might have a little bit more juice left in it, we could have made a little bit more cash going into the close, but not a huge spread by any means. What do we got there? An extra 50 bucks or so. Still a 2x, a little over a 2x compared to conservative mode, but it wouldn't have been that big of a stretch to hold it right here. Now, if we look at the daily here, try to pinpoint, what we might have been seeing there. Bottom of the candle today, just kind of butting up against, well, not a whole lot of anything here, coming way back here to these levels. And that's exactly where it put the brakes on today. So, never really threw a bunch of curveballs at us, was never back above the entry level. So all we had to do here, take a little bit, maybe do the 50-50 routine, which is until you get accustomed to making the decision, hey, should I go with the AI and completely exit the position? Or based on what I'm seeing here, I think there might be a little bit more juice left in the trade, take a little bit more risk. Well, you can always do half and half. If you're in that trade, peel out a half with the AI on conservative mode, stick with the other half in hopes of making a little bit more. You can see, even if you would have set a stop on that second lot up here at the blue line at break even, it would have kept you in the trade all day. If it would have stopped you out, at least you would have made money on the first lot. So all in all, not a very exciting trade, but a moneymaker nonetheless. And that is about all we had here today as far as conservative and moderate profit go. CAR coming along with a little bit of spread here, but I mean, a flat versus $11, nothing to write home about here. As you can see, no stop outs in the exit reasons. Boy, we sure had plenty of them in the past 2 weeks. Today, not the case. No stop outs in play, which leaves the very last topic here. What about add-ons? What about leveraging a position that we might already be in with the AI? And Dell presented a pretty good opportunity today. Tell you what, let me just flip this chart back to 15 minutes. Getting a little bit of lag here, so bear with me. I think Steve was seeing a little bit of that too. You know what, it's not really clear there, which is why I had it on 5 in the first place, so we're gonna pop back over there. Okay, now what might be a little hard to see here is this opening wick here on the opening candle here. We can see right here the opening 5-minute candle, the high was right up here at 99.30. That's where I've put my line here because the AI calls it right here, 99.03. New people might be asking, well, why did the AI recommend Dell? Well, we got that question quite a bit in the test drive. Why would the AI recommend a buy in Dell? Well, it's not the AI specifically, it's the strategy, which of course is part of the AI. But the strategy was the breakout strategy. And we can see right here, breakout strategy performing at 50% today, actually underperforming. Oh, clicked on the wrong symbol there. But we've got statistical probability on our side with every AI play. Doesn't guarantee that it's going to work, but not a bad entry signal coming right at the 99.03 level here. And when we see that, we can extrapolate. Okay, what might happen here? The low has been put in. We're well off the lows. High's been put in. We get the buy signal right here. And sure enough, 5-10 minutes after that entry candle, what do we have right here? We've got an opening range break or a secondary pattern playing out. We got statistical viability from the AI, and then we've got what I like to refer to as an auxiliary pattern playing out. How was the volume in Dell today? Well, big cap stock, pretty big float of 268 million, but not bad relative volume to finish the day of 1.65. So when we see this and we're thinking to ourselves, okay, if it gets up here, this might be a good time to add. See the orange arrow right there, right as that opening range break hit. That would have been a good time right in this little 15-minute period here to tack on some additional shares, and you would have gotten to enjoy the rest of the upswing today. So just a nice clean trade on the Dell and a secondary pattern playing out, big cap stock with decent volume. All right, just checking the questions panel here because I can see it flickering around there. Let me read your question there, Liliana. How can we set up a window to show us all new highs for a ticker with increased volume? In other words, no previous resistance on the ticker. How can we set up a window to show us all new highs for a ticker? So I think you're referring to a single symbol, all right, when you're referring to a ticker and no previous resistance on that ticker. Well, when you say no previous resistance, that makes me think of a stock that is at all-time highs, right? Because stocks that are all-time highs have no previous resistance. All right, and I can see you responding to yes. So let me take a little segue here because that's about all that we got for Holly. And what comes to mind is this window right here. What you see, the title here, and
Well, she qualified with a newly released ticker. That makes it a bit tougher.
okay, well,
An
if you're
IPO.
referring to an IPO, okay, that is a different game. And even an IPO, if it's not at all-time highs, you have a limited number of candles. I'm trying to think of one off the top of my head. What was that one that Mike was Rhino, right? Not Rhino, but Hippo. I'm getting my mammals confused here. Okay, so here's an example of a relatively young IPO. 1, 2, 3, 4, 5. Let's see that. Well, let's just say back on the 3rd, okay, of August is when this thing came public. Okay, so here we have an IPO back from the 3rd of this month, and we can see it's just been on a steady downtrend. Okay, so back to your question. Yeah, you would just have to compile a list of IPOs, things that have only, and you'd have to dictate your, how many days would you like to see? There's not really a readily available way to construct a filter complement to show us IPOs. There's a lot of different sources out there that will help you find IPOs. And then you would just have to monitor that specific list for IPOs that are hitting highs, in which case, let's say this guy did make a big run all the way up to the previous high, and then it busted out, there would be no resistance. But it would really be maintaining that list of IPOs. So don't really have any resources to point you to right now, but a good idea would be to send that into info@trade-ideas.com with the specifics, and perhaps we could put together some type of system or number of steps or point you to some resources for tracking IPOs in this capacity, if that makes sense. All right, don't want to get too far off topic here. Okay, so for those of you who attend the 5 p.m. Eastern webinars on the regulars, you know that I always like to showcase the opening range breaks for intraday trading because it's a very simple pattern. And boy, there were quite a few quality setups today on the long side. Of course, there's always going to be a few short setups as well, just not near the risk to reward ratio that we are going to see in the long side. So let's go ahead and take a look at some of those today. And just to clarify, before I start showing you guys these setups, the windows that I use to find these guys are these guys down here in the bottom right. My turbo breaks up, turbo breaks down, keying off of relative volume. And if we take a peek into the config here, for finding the ones to the upside, we're just using the new high with a very simple filter complement. Pattern's going to be secondary on these, and I'll get to that in a moment. First and foremost, I just want to make sure that they're hitting highs or lows for that opening range break up or down with this simple filter set in play. They had to have traded 100,000 shares already. They got to have relative volume of 3 or higher. And then I've just got a cap here of 150, nothing really on the minimum price. Now, Dell, if we kind of circle back around to that AI chart, this is an opening range break right here. We had the high put in, we had the low put in, sneaks back up here and breaks that range. Now, everybody just keep in mind, especially the new folks, it can't break that range unless, you guessed it, it hits a high, okay? So kind of going back to the comment I made earlier, pattern is secondary. I know all the stocks coming through this window are gonna meet my high volume criteria, and they're not gonna be too thin, and they've already traded at least 100,000 shares. Might be spready, they might not, but we never know until we pull the stock up. And then we just see if the timing is right on the pattern. Most of the times when you pull something up, maybe it's not conducive enough, maybe the chart pattern's not pretty enough, it's too stretched out, or maybe we're late. So what we're looking for here is proper timing. And we had a very good entry on ABVC today. All right, so I've got this one pulled up. Notice these are the 5-minute candles. We had a little consolidation right here. And then before too long, we got a new high coming through this window right here, approximately at 9:53 my time, which would be 10:53 Eastern time. So you can see here, kind of hard to see with these 5-minute candles. Let me try to stretch this out just a little bit more. But we can see new high was broken. Notice the nice flat lining that we had here, the nice consolidation. You know, we don't have the stock all doing these crazy things with these big stretched out moves. It's nice, it's tight, and then it starts poking its head above that new high there with good relative volume. So this blue arrow here is the candle where that previous range was broken. So taking an entry anywhere in that candle, let's look at the high and the low real quick here. What do we have? A high of 220 and a low of 213, so only a 7-cent move in that candle. And typically what I do here to assess risk is look at the prior 15-minute period, not including the entry candle. And you can see I even stretched it out to the bottom of this candle because that range was so tight. So what you see right here in this little space below, this is the risk area. This is where we would have set our stop loss right here, okay? After we buy the stock, what do we get? More consolidation before a huge move by the end of the day. Now, sometimes these patterns repeat themselves. We came up here, we popped a high in the 10-10 candle. So we could easily mark this off again, kind of like that Dell trade. Original signal right here is this range is broken, moves higher, sideways action, and then we have the pattern repeating itself here at the 11:25 or the 12:25 Eastern candle, which would have been a good time for a second entry on this before this big move occurred. Now, of course, we did top out all the way up here at 349 before coming all the way back down, but huge profit potential in the ABVC today. And when you see relative volumes like this, something's going on. So if you can find a conducive pattern with low risk, well, that's what it's all about. Risk to reward, how many times could we fit this risk area into this reward area? Quite a few times. Very high risk to reward ratio there. Okay, I don't know what happened to my questions panel here, but something is a little weirded out here, so let me resort it here. It just expanded too much. Okay, so Steve, I see you tackled that question there. If I need to circle back around, let me know, because for some reason my questions panel is all truncated. Okay, all right, next on the list. And of course, Steve, this symbol was on my mind because Michael brought it up last week, but GoEv putting in a nice solid performance today. But my charts are giving me problems today. All right, there we go. All right, so I really, a little bit more liquid than the ABVC that we just looked at. And these are some of my favorite setups. Number one, we got a small gap up occurring, from Friday. Geez, is anything gonna cooperate with me today? Hold on. A little bit of a gap up from Friday. Buyer clearly in control in that first 5, 10, 15, 20-minute period. And then we get the sideways motion. Gap up, buyers in control. They can't just keep buying and buying. They got to take a little break. So we got buyers and sellers becoming equal, in this little period right here. And then boom, right here, we get the break to a new high. How was the volume in GOE of today? Finished at a mere 11.15 on the relative scale. Usually only kicks out probably a few million shares, but we rocked 15 million shares today. So look how low the risk is here. Could have bought anywhere in this candle and been pleased with the price that we got. Risk levels down here. Never even, throws a little bit of a wiggle here before reclaiming that level. So really good risk to reward that we can see right here as well. And I would probably need to update my reward level up here. So risk level here, could pack that into the reward level many times over. And GOEV finishing near highs for the day. All again based on this real simple pattern here, a simple opening range break. Entry candle here, 5, 10, 15 designates that risk level. So nice solid pattern from GOEV today. And guys, these were all over the place today. I'm going to show you about 3 or 4 of them, but there were plenty more coming through here as well today. BYRN, not too shabby either. Once again, not that big of a gap, but buyers clearly in control for the first 20, 30 minutes. Got a little bit of a consolidation before we took a pull down here, but we didn't break this level back here until 10:50 my time, would be 11:50 on the East Coast. But we've got low risk as well. Entry candle here, right there, coinciding with the blue arrow. Prior 15 minutes, 5, 10, 15. That's the level right there. So extremely low risk once again, and extremely high reward level up here. All right, could pack that risk level many times into that reward level. Of course, where you get out is where you feel comfortable. Plenty of times to get out of this one for some nice juicy profits on the BYRN. Once again, how was that volume level? 4.66 going into the close. Even juicy options volume on this one as well. Now, these can come in all shapes and sizes, and they can be found through different ways. So for example, this unusually strong options volume, which has kind of cooled off since earnings are starting to go away. But I'd be remiss if I didn't pull out PXLW. All right, notice what we're seeing here. PXLW coming along at 1041, coinciding with the blue arrow. Well, what just also happens to be happening right as this window spawns PXLW. We got the same pattern, all right? First 20 minutes of the high or of the open, that's when that high was put in. Of course, we did come down here and put the low in, which is important. And then we just slowly grind, boom. As soon as that level was hit, could have made a great entry here. Risk levels down here. A little hemming and hawing around the entry line, but a good trade nonetheless. That signal coming in 527. Of course, that's the same price that you get down here. Not near as big a move as we saw in some of the other ones that we looked at, but almost a 60-cent move in a $5 stock. I'll take that all day. So keep in mind, these can come in all shapes and sizes, and they can come through all different types of windows. But the key here, the main thing in common, is even the high options window is using new high, just like my windows are using new high, new low. So let me just circle back around when I said earlier, the pattern is secondary. In this window, we have really high relative volume. Over here, we've got high volume along with high options volume, but the same catalyst, the same alert, the new high. We cannot be experiencing a range break without the stock hitting a new high. And then we just have to decide, is the timing appropriate? In this candle, obviously it was. Now, if I was eating a sandwich or talking on the phone and missed this signal and looked back at it 10 minutes later and I didn't see it till right up here, well, too late. This was the optimum time right here. This is too late. This is chasey. Now, maybe on a pullback to here or, over here, too late. So getting it very close to proximity of the breakout, whether it's on the initial push or sometimes it gives you a second chance on a pullback, that is really what we're focusing on here. And that's why we're using the new high to identify that. All right, so that's about it for the long side. Let me just do a little time check here because I do want to save time for that new heat map. But let's take a look at a couple of the downside candidates. There were a ton of stocks coming through here today, but a lot of them were just not high quality. This one is kind of an anomaly and one of the only ones that presented itself. I mean, talk about a flat line. I mean, you could level your house with that. Problem with this one is it's a recent IPO, so depending on where you trade, it might have been shortable, more than likely not, unless you have a broker dealer that locates for you and says, hey, we can find it for a special fee, or unless you're at a prop shop. But it's all about the pattern, right? We got a break right here coming at 786. Not a huge move down to 750, but it's the pattern nonetheless. So that was really one of the only decent setups that I saw today. Now, whether you could have participated in it or not is another story. Other than that, really the only one that looked good to me was ZH, and I'm just waiting for my charts to change there. Okay, so notice the break level right here. We got the big opening down candle, regress all the way back up to it. So we did have a little bit of an energy expenditure, which I typically don't like to see, but the pattern is the pattern. It worked nonetheless. But what do you see here? Risk level, pretty big. Reward level, only slightly bigger than the risk level. Maybe close to a 2x, more like a 1.7 or a 1.8. So the risk to reward on a lot of these setups today, which were nowhere as pretty as the long side, just wasn't there. Clearly, the path of least resistance was to the upside. And you know what I forgot to do earlier, Steve? I forgot to talk about the compare account readings. So I'm just going to circle back here because my compare accounts that I like to watch after the first 15 minutes, which are looking at stocks hitting highs and lows after the first 15 minutes with accelerated volume, this was the reading that I had today. 69%, 70%. When you see these numbers, a lot of the times that market's going to move. And if we pull the S&P up here, 5-minute candles, 5, 10, 15 minutes. Here's the mark right here. And then what did the market do for the rest of the day? It was a nice slow grind up. Let me put this in 15-minute candles because we had the same type of readings on Friday. Okay, and even with the gap up today, after that first 15-minute candle, off to the races. Friday, after the first 15-minute candle, right here, off to the races. Okay, and these readings were very similar. So they pretty much nailed it Friday and today. And this is going to tie into what we look at here towards the end, which is the modified sector channel that I handed out. Couldn't remember if it was the last one or the one before, but here is the screenshot. What I did is I took the sector channel, which is readily accessible to everybody, and what I did is I attached respective compare counts for each industry or sector. Okay, now I don't know why I'm getting all this truncation here, so let me do this. Okay, well, still doing it. Okay, so what I've done here is I've inserted a compare count for each sector. Now I know it might be a little too hard to read here. Let me hit present one more time and see if it is going to let me move things over. No, don't know why. Okay, so we'll just have to do it like this. Now what I'm going to point out here are the sectors that had high buying on the compare side today after the first 15 minutes. So technology right here, and after the first 15 minutes, we had 86% buying and only 14% selling in that entire sector. In the financials, 94% buying and 6% selling. If we look over here at the industrials, pretty beefy over here too. 76% buying versus 24% selling. And then even down here on energy, 89%. All right. So these were definitely the sectors where the buying was really active in the first 15 minutes. And we use the same theory as we do with the big cap compare count that I like to watch for overall market movement. It's the same thing, just applied to the. So if we go back and one momento, let me get rid of this guy. And now I have the sector channel in its own contained window here. And if we go check out these hot sectors based on what we saw in the compare count activity, what we're going to find is that if you were going long today, which was the path of least resistance, a lot of these things held up very nicely. All right, so we'll just use the chart that's in the window here. Well, actually, I want to make my 10 period visible here, so we'll just kind of keep it down here. So what you're going to notice in these stocks where the sector, where you saw high buying in the first 15 minutes to those big biases, is they either pulled back a little bit or they continued. And if they did pull back, a lot of them barely got down to the 10 period here, which is the green line, okay? And a lot of them finished near highs for the day. So giving you great opportunities to buy the pullbacks or buy the continuations. Xilinx holding up well into the close. Okay, since that's not linked, NVIDIA, okay, after that first 15-minute candle, boom, 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 off to the races. I could have swore, there we go, now it's working. MXIM, a little bit of selling, but not even coming down to that 10 period and finishing not too bad. That's probably the worst performer out of the ones we're looking at out of technology. FTNT, not bad at all. And you know what you need to notice here is how well these stocks held up, and plenty of times to buy the dips in these. A lot of these guys when they're in play, they're going to adhere to the 10 period. FT&T, not so bad as well. We all know AMD has just been a monster as of late and continuing that run. Of course, we did take a little bit of a pullback from the highs there, but looking at the opening 15-minute candle here, buying these pullbacks would have paid off pretty good today. WDC, drive maker, buying the pullbacks coming down to the 10 periods, okay? So I'm not telling everybody to jump into these things immediately when you see those high buying versus selling compare counts, but that's gonna let you know what's going on in that specific sector. They're buying the hell out of them in the first 15 minutes. Some of them are gonna keep going. A lot of them are gonna pull back, but if you're gonna buy the pullbacks, pay attention to the 10 period because a lot of them, if not all of them, really adhered to the 10 period there. Industrials, strong as well. Let's take a peek at some of those. CTOS, not really a whole lot of action from that one today. AAL, once again, we got the pullback to the 10 period. GNRC, right after the first opening candle, boy, that one just took off. A really strong performer all day. And I apologize for the lag here. I don't know. I think it's because I've got this docked window up. It's making my system a little slow. But once again, Steve was talking about contrarian plays. Just because these things are showing high buying volume right off the bat, there's been plenty of them that we've seen, not only in the techs, but in the industrials that are pulling back right to that 10 period. So a good technique on some of these is if they look good technically right off the bat, you start that little opening position and see if you get that pullback to the 10 period. Financials were another sector that were very strong. Deere, just off to the races right off the bat there. Let's take a look at some of the financials. LNC, first 15-minute candle, and then strong for the remainder of the day, giving back just a little bit at the close there. One Mississippi, two Mississippi. Okay, MMC, first 15-minute candle you can see here, then just off to the races. SIVB, not quite as juicy as MMC, but after that first 15-minute candle, what we're noticing here in the financial sector is these nice little lifts. So pretty simple moving forward for those of you that have this layout. Watch for pullbacks, watch for continuations. If something is pulling back, then we're going to key off of the 10 period here. ALL, okay. If it is a runner and it keeps going, well, after that first 15-minute candle, it'd be pretty reasonable to use the low of the day, right? So if it's a momentum play, if we think it's going to keep going, use the opening 15-minute candle and then pay attention to the pullbacks and the 10 period SMA. And you're going to notice a lot of the ones in the financial sector, the ones we just looked at, they all kept going, but notice what happens here. A little sideways action, a little pullback just above the 10 period. All the industrials seem to pull back right to the 10 period. That seemed to be the juicy spot for them. But it's just something that you'll have to kind of get used to moving forward. Getting right into it with a little starter position, using the opening 15-minute candle as a low for your stop level. And then if it keeps going, great. If it pulls back, pay attention to the 10 period and just use some, reasonable risk management there. All right, looks like we're just about to the top of the hour here. So I tell you what, I'm gonna drop this heat map into the chat panel for you guys. And I'm just gonna have to load it from my cloud here. Give me 1 second. And this is the most recent version. Okay, there we go. Sectors with compare counts. All right, Steve, do I need to backtrack on any questions? I do believe my questions panel looks good now.
I think you hit them all.
All right, well, once again, I want to welcome everybody back after our little 2-week hiatus. So Scott, if you're ready to walk us out now, let everybody know how they can save a little bit of money on a new sub or an upgrade. I think it's
Yeah,
that time.
all right, thank you. So let's see. Items, make sure you
Back
get
up
that new
there.
ebook that we released recently, the favorite strategy indicators from Dave Made, our director of software development, the guy that brings us Holly and our backtesting module and our brokerage plus module, among other things. TradeIdeas.com/strategy. It's a free download. Go ahead and grab that. There's a podcast we release intermittently. Go ahead and add it to your subscriptions on your podcatcher and check out the last few interviews we released. They're really good. And then stay tuned for the next ones as they come out. There is a sale. We had the test drive, so we're opening the test drive sale to everyone. It's a bigger promotional code than we usually give out. It's 25%, which is pretty huge, especially if you sign up for the year instead. And those prices on there are the full prices, so you'll be saving 25% off of that. You can buy it by the month or the year. Test drive 25, that's going to expire Sunday the 29th. So use that before this coming Sunday. Also, you can find Jamie on Twitter at Quantbot. Steve Gomez is TI Steve G. And we're on Facebook. Trade Ideas Pro is the handle, so follow us and like our stuff. And any questions, they should all be emailed to info@tradeideas.com. That goes into our help desk, gets you the help you need. We'll get this recording up later on tonight, and you'll get an email reminder tomorrow about how to find it. So stay tuned for that. Thank you, Gene and Steve. Have a good rest of your day.
Thanks everybody for showing up. We'll see you guys tomorrow. Bye-bye.